Assalamualaikum. My name is Nur Nujbatakia binti Yusof. My matric number is A2382457. Today, I will be presenting the Corporate Disclosure Content Analysis project under the Integrated Case Study course AAT 30303. This study focused on a comparative analysis between Apollo Food Holding Berhad and Oriental Food Industry Holding Berhad. The main objective of this accounting analysis is to evaluate, compare and critique the quality of financial reporting and the level of risk exposed for the 3 financial years, namely 2023, 2024 and 2035. Through this study, we can look beyond profit figure to measure the extent of management transparency in the face of global economic uncertainty. Look at the corporate achievement. Both companies recorded important history when they were successfully listed on the main board of Bursa Malaysia in the same year, which was 2000. Throughout in operation, Apollo managed to maintain its status as an iconic chocolate wafer cake brand for over 40 years, and now the majority of their shares have been taken over by Scoot Capital, the owner of Baskin Robbins Malaysia. For OFI, their biggest achievement is building the snack brand Superring to international recognition and virality, in addition to progressively expanding physical operation from Factory 1 to Factory 4 to meet export demand. In terms of organizational size, Apollo has a large workforce of 774 employees in Johor with a market capitalization or market cap estimate at around 470 million ringgit to 500 million ringgit. For OFI, they have 578 employees who operate a wide network of factory operation from Factory 1 to Factory 4 in Malacca with a market cap value of around 250 million ringgit. Next, Apollo product portfolio focus more on compound chocolate and large-scale bakery products such as chocolate wafer cream, layered cake, and chocolated cake wafer snack, while OFI has a more diverse product category divided into 4 main segments, namely snacks such as Superring and Rota, Jacker potato crackers, biscuit and wafer and bakery products. Finally, Apollo main competitors consist of OFI itself, Munchies, Mami, Double Decker and Watai Industry, while OFI competes directly with Apollo, Mami, Cocoland, as well as international import brands such as Lay and Pringles in the overseas market. Next, let's look at Section A, which is the company overview for comparative analysis between Apollo Food Holding Berhad and Oriental Food Industry Holding Berhad. I will call OFI. Both companies are classified under the same sector, namely consumer products and service in the food and beverage soap sector. In terms of location, Apollo headquarters are located in Larkin Industry 8, Johor Bahru, Johor, which is very strategic for the southern market and Singapore. Where OFI headquarters operate for Ayer Keroh Industry 8 in Malacca. Next, if we look at the market aspect, Apollo has a very strong domestic influence and carrying out extent regional export to countries such as Singapore, Indonesia, Thailand and Brunei. On the other hand, OFI has a much wider global market scale where they export their snack product to more than 50 countries covering the Asia, Middle East, Africa, Europe and the United States. In terms of the history of establishment, Apollo was established in 1984 through its original entity, namely Apollo Food Industry, where OFI started early in 1978 as a small-scale family business in Melaka. Next, let's move on the section B, financial performance for the 3-year period from 2023 to 2025. If we look at the revenue or sales revenue aspect, OFI recorded very consistent growth every year, where it increased from 382.2 million ringgit in 2023 to 451.2 million ringgit in 2025. On the other hand, sales revenue for Apollo appeared to be slightly flat in 2024 before jumping up to 282.1 million ringgit in 2025. However, in terms of profit margin management efficiency, Apollo shows superior performance by recording a higher gross profit margin than OFI for all 3 consecutive years, where Apollo higher margin rate was 31.2% in 2024. This also support Apollo better investment return efficiency as evident by their ROA and ROE value, which is were generally higher than OFI, especially in 2023 and 2024. One of the most critical accounting findings in this table is the debt to equity ratio section. How we can see that Apollo maintained a status of 0.00 or zero debt throughout the 3-year period. Meanwhile, OFI used a stable debt financing strategy with a ratio of around 0.31 to 0.35 to finance their asset and operation, which OFI total liability increasing to 97.9 million ringgit in 2025. Finally, if we look at it from a shareholder return perspective, Apollo earning per share value is much greater at 56.63 cents in 2025 compared to OFI, which is recorded 25.48 cents. Apollo also offer a more attractive dividend yield to investor with a higher rate of 6.8% in 2034 compared to OFI higher rate of 5.2% in 2025. For section C, which touches on the dam or fish management, the philosophies of the two companies are very different. For Apollos, in terms of strategy and operational risk, they are focused on local competition, changing tester for low sugar snack, and are exposed to fluctuation in global raw material price such as flour, sugar, and cocoa. However, their financial risk is very minimal as two companies do not have any bank debts. Therefore, Apollo mitigation strategy is quite conservative by maintaining large cash reserves and using short-term supply contracts. In terms of risk management frameworks, they are structured in centralized under the board of directors and audit committed without any spare part risk unit. Next, for OFI, their strategic risk is more challenging as it involves geopolitical uncertainties and international trade restrictions. In terms of operational risk, they focus on product quality control and labor shortage issue. Meanwhile, for financial risk, OFI face complex foreign exchange rate risk due to high export activities. As a mitigation strategy, OFI acts profitably using forex the derivatives instrument and investing in robotic machine. Finally, OFI ERM framework is more mature and holistic as is an integrated risk management committed with regular update to the risk register. As an important accounting insight, Apollo zero debt position does not necessarily reflect absolute efficiency. Although free from interest risk, Apollo is actually less likely to take advantage of tax shield and less aggressive in capital development. On the other hand, OFI transparency in disclosing forex risk management scientifically in the financial notes provides a more mature reporting quality and send a positive signal to external investor. In conclusion, both companies are in a healthy financial position but hold opposing risk management philosophies. This study tells us that non-financial disclosures such as the ERM framework are as important as the figure on the balance sheet to reduce the information gap for investors. Finally, I suggest to investors who want stable dividend to choose Apollo, while those looking for dynamic capital growth can choose OFI. To Apollo management, it is suggested to start stepping out of their comfort zone and investing in industrial automation for future competitiveness. Both companies also need to start integrating sustainability and climate change risk reporting as per Bursa Malaysia requirements. Thank you. That's all for me.